If you're keeping your emergency fund at a big five bank, you're losing over $6,000 in the next 10 years. And if you're actively saving every month, that number jumps to over $13,000. I'm Tony, a CPA and financial planner here in Canada. I'm glad you're here. Here's the thing about savings accounts. The wrong bank doesn't just give you a lower rate, it costs you thousands of dollars over time. I ran the numbers on what happens when you leave $25,000 sitting in different banks over 10 years. The difference? It's the cost of a down payment on a car or a dream vacation or a major home renovation. Today, I'm walking you through the 5 best high interest savings accounts in Canada right now, the ones you need to avoid, and exactly how much this decision matters for your financial security. I want to be clear about something. Every dollar in your savings accounts should be working for you, not just sitting there. Your emergency fund isn't meant to make you rich, but it shouldn't be losing you thousands of dollars either. And that's exactly what's happening if you're with the wrong bank. Lots of hardworking people who are careful with their money, who budget and save, are keeping their emergency fund at the same bank they've had for years. Meanwhile, that bank is paying them 0.3%, while online banks are paying nearly 3%. The difference between 0.3% and 2.75% on a $25,000 emergency fund, that's $612 per year. Over 10 years, $6,311. And if you're adding $200 every month to that account, which you should be, the difference jumps to $9,147. That's not pocket change. That's real money you could use for whatever matters to you, whether that's buying a house, starting a business, paying off debt, or just having more financial security. Let me walk you through 5 banks with competitive rates right now. I'll give you the rates, the requirements, and what makes each one different so you can decide on which one fits your situation best. 1. Neo Financial. Neo Financial has the highest rate available right now at 2.9%, but there's a requirement. You need at least $20,000 in your account. Below that, the rate drops to 2.25%. On $25,000, you'd earn $725 per year at the top rate. The trade-offs of Neo Financial are that it's a mobile-only bank and it's not available in Quebec. If you meet the minimum and you're comfortable with mobile banking, this gives you the highest returns. Number 2, EQ Bank. EQ Bank offers 2.75% with no minimum balance and no monthly fees. You get 24/7 access to your money, unlimited free Interact e-transfers, and free ATM withdrawals across Canada. On $25,000, you earn $687.50 per year. The appeal here is simplicity, no balance requirements to hit a rate tier, and you can access your money anytime. If you want a more straightforward option without minimums, this is solid. Number 3, WealthONE. WealthONE offers 2.6% with standard online banking features. There's a $1,000 minimum to open the account. On $25,000, you earn $650 per year. It's a straightforward option if you meet the opening requirement. Number 4, Canadian Tire Bank. Canadian Tire Bank offers 2.4% with CDIC insurance and no major restrictions. On $25,000, that's $600 per year in interest. Number 5, Hubert Financial. Hubert Financial is a Manitoba credit union that operates nationwide. Their rate is 2.3%, which puts them at number 5 on this list. But here's what makes them special. Instead of CDIC insurance with a $100,000 cap, they have unlimited deposit insurance through Manitoba's provincial system. If you have a large emergency fund, say $150,000 or $200,000, though I don't think you should keep that in emergency fund, this unlimited coverage matters. At other banks, you'd need to spread that across multiple account types to stay fully insured. Quick update. I should mention Oaken Financial, which offers 2.8%. That would actually rank number 2 on this list. Check the pinned comments for the full corrected ranking. Now let's talk about the banks that are costing you thousands. The big 5 banks. RBC, TD, BMO, CIBC, Scotiabank. They're all paying between 0.3% and 0.55% on regular savings accounts. Let me put this in perspective. On $25,000, you'd earn $75 per year. at these banks. At EQ Bank, you'd earn $687.50. You're losing $612 every single year by keeping your money with a big five bank. Over 10 years, that's $6,311. Now, I know some of you have been banking with RBC or TD for decades. I get it. There's comfort in staying with what you know. But this is one area where loyalty is costing you real money. The only exception, short-term promotional rates. BMO sometimes offers 4.6% for new accounts for a few months. If you're disciplined enough to move your money the day that promotion ends, fine. But most people forget. And that's exactly what the bank is counting on. Tangerine Bank also loves to advertise 4.5% promotional rates to new customers. Sounds amazing, right? Here's the trap. After 5 months, Tangerine drops to 0.3%. And they're counting on you forgetting to move your money. I did the math. If you get 4.5% for 5 months and then 0.3% for the rest of the year, your average annual return is about 1.88%. EQ Bank's steady 2.75% beats that. Unless you're setting a calendar reminder right now to move your money in exactly 5 months, skip the promotional rate. It's designed to make the bank money, not you. A lot of people love Wealthsimple for investing, and I think their platform is great for that. I use them. But their savings account rate is only 1.25%. On $25,000, you'd earn $312.50 per year when you could earn $687 at another bank. You're losing $375 every single year. Over 10 years, that's $3,746. They do offer higher rates if you have over 100,000 across all Wealthsimple accounts. But even then, it's only 2.25%. That's below the top options. Another bank you might want to avoid is Bridgewater Bank. Bridgewater Bank offers 2.7%, which looks competitive. But here's the deal breaker. They have no online banking interface. You have to call during business hours or mail in forms to access your money. In 2025, that is unacceptable for an emergency fund. The entire point of an emergency fund is that you can access it when you need it, not when it's convenient for the bank. Now, let me show you what this decision actually costs over time. Scenario one, you have $25,000 saved right now and you don't add another dollar. In 10 years, at EQ Bank, you would have $32,000. At a Big Five bank, you'd have about $25,000. That's a difference of over $6,000. Scenario two, you have $25,000 saved and you add $200 per month. That's realistic if you're saving about 10% of a $60,000 salary. In 10 years, at EQ Bank, you have $59,000. At a Big Five bank, you'd have about $50,000. That's a difference of $9,000. Scenario three, you have $25,000 and you had $500 per month. In 10 years, at EQ Bank, you'd have about $99,000. At a Big Five bank, you'd have about $86,000. That's a difference of $13,000. That $13,000 could form part of your down payment on a home, or completely pay off a car loan, or start a business, or fund your dream vacation, or go towards your child's education. It's not abstract, it's real money that could change your financial situation. So here's what I want you to do this week, not next month, this week. Step one, log into your current bank account and find out what interest rate you actually get. Write it down. Step two, calculate what you're losing. Take your current balance, multiply it by the top rate you saw. Let's say 0.025 as an example. Then subtract what your bank is actually paying you. That's your annual loss. Step three, choose one of the banks we discussed based on your situation. If you have $20,000 plus, NEO gives the highest rate. If you want no minimums, consider EQ or Canadian Tire. They all take 10 to 15 minutes to open online. Step four, transfer your emergency fund. Keep 3 to 6 months of expenses easily accessible. Step five, Set up automatic monthly transfers. Even $200 per month adds up to thousands extra over 10 years compared to a big five bank. Look, I know this might feel like a small decision. It's just a savings account, right? But when you're building wealth, small decisions add up. Every dollar matters, and leaving thousands on the table at your bank is one of the easiest mistakes to fix. Switching banks takes 30 minutes. The payoff lasts decades. If you found this video helpful, I'd love it if you'd subscribe to the channel. I make videos every week on Canadian personal finance, smart investment strategies, tax planning, and how to build wealth without burning out. And if you have friends who are still banking with the big five, send them this video. It's literally free money they're leaving on the table. Quick note, I'm not affiliated with any of these banks. This is just my independent analysis based on current rates and features. Always do your own research before opening any account. I'll see you in the next video.